Okay, all right. Here we are. We are about to start with the third session of Unido Talks. The topic of today is Web3 and Wall Street. But we will not be sticking this session just to Web3. We are going to have a very comprehensive discussion about financial institutions, enterprises, Web3, where the new technology, the new trends are disrupting with respect to NFTs, P2E games, metaverses, etc. So before we start with the main questions, let's start with you, Alastair. Would you like to give us our viewers a small introduction and maybe a little bit more information about WW Ventures?
Cool, sounds good. So I'm Alastair Band. I am head of marketing and communications at WW Ventures. I got into the crypto space in 2017 after a friend who had introduced me to Bitcoin in 2010. I didn't buy any, hence why I'm sat here talking to you, not on a private island. But same friend that introduced me to Bitcoin in 2010 came to me wanting to teach people about what Bitcoin and blockchain was at like just a super high level at the time. Reddit, crypto, Twitter, it was, if I'm being honest, it was a bit of a toxic place. If you didn't already know, then you weren't cool enough for it. And we set out to change that. So we set up this event called Blockchain Beginners, teaching people about like what a hashing algorithm was, what SHA-256 was, just because Bitcoin was all over the news, and we were like, you should probably understand something about what you're investing into. And we set up that event and it sort of spiraled out of control a little bit. We ended up getting between 500 and 1,000 people every month paying for tickets to come and listen to us two idiots waffle on. And yeah, it was good. We thought that was it. That was end game. We were just going to run an event, have a few beers once a month, and that was going to support our lifestyle for forever. And then 2018 happened, and we all know about 2018. But yeah, and then since then I've gone on to work for various companies. Most recently, Boson Protocol as head of community there, and then of course with WW Ventures right now. And yeah, I love it. It's great.
So what about let's say about what is your approach in WW Ventures when you're looking for startups and looking for new ventures, and how you are sourcing these new companies and approaching the investments?
Yeah, so we've got a full research team and a marketing team of 6 people now. So the research team, they're out there, they're doing sort of like what traditionally would be business development, but almost like in these communities early stage, and speaking with the founders, doing their research on the founders, the teams, the project, and does it fit within our investment thesis? And our thesis sort of primarily lies around layer ones, Web3 tooling, and metaverses and gaming, which also incorporates NFTs. There is a fourth pillar, but I forget what it is. But it's primarily around those 3 areas, or 4 areas, with the fourth pillar that won't be mentioned. Because we see them as areas for massive growth, particularly metaverses and gaming and play to earn gaming. And layer ones, there's always a race to be faster, better, more secure. And the Web3 tooling, every time there's a new layer one, you need some tooling for it, right? I'd say, if we're being honest, even Ethereum tooling setups aren't great. They're okay, but as soon as you move away from Ethereum, it sort of gradually gets more and more difficult to just go online and find some documentation and start building.
That's an interesting point of view, and I think this is something which many people from our community, and especially the retail investors, would also like to understand from a VC and from a big investor like you. So what is it about? Let's consider 2 parts. One is the metaverse, which we are discussing, and one is the Web3. So what is about Web3 and also about metaverse, which the VCs are finding very attractive? Are there any features, or you see a future in it? What are the possibilities of that future, which VCs find attractive, especially in Web3 and in metaverse?
Yeah, so there's actually, it seems to be that there's a bit of confusion, or not confusion, just lumping all of Web3 into blockchain and crypto. when Web3 actually incorporates a bunch of other sort of new and modern technologies, including artificial intelligence and all that. So when we talk about Web3, it's not necessarily about anything to do with crypto and blockchain. It's Web2 sort of incorporates a lot of things that have been done in, sorry, Web3 incorporates a lot of things that have been done in Web2 and in the previous sort of like .com boom, and like what we saw to the tail end of that in terms of getting people to, I guess, change their ways of thinking and change their ways of doing things. And I think that's where it, or why it's been called Web3, because it's an evolution of Web2 to the next stage. And obviously, blockchain is incorporated quite heavily into that, because you have this immutable record where you can sort of speak to other people, you can transact goods, and it can be in a completely trustless manner. It doesn't have to be a trusted third party or blindly trusting each other with that. And then when you move on to metaverses, I think this, in my opinion, and this is just my opinion, just for the record, it has been accelerated by the pandemic. Like I've been very fortunate through the pandemic in that, you know, for me, it hasn't sort of hugely affected me that much, but where I live, it's a very transient, very tourist heavy community and relies a lot on tourism. And I know a lot of people that have been affected very badly by it. And I also know of a lot of people sort of around the world where them going into lockdown involves them staying indoors in a place that isn't the best. But in a metaverse, you can be whoever you want to be, virus free, whoever you want to be, wherever you want to be, and you can live vicariously through your character. And I think that is insanely powerful, particularly, you know, well, I mean, there's talk about countries going back into lockdowns again. And I think that's just going to accelerate that, because we're no longer bound by what is physically possible. We're only limited by our own imaginations. So in a metaverse, you can wear a jacket that is on fire, and it's obviously not going to give you third-degree burns. Whereas in the real world, it would look cool, but you'd have to take it off after a few seconds. Like, it's just not possible. But in the metaverse, like, the only thing that I would actually say, in my opinion, that I'm disappointed with the metaverse about is that the default is to be a carbon copy of what already exists in the real world, and it doesn't have to be.
Yeah, I mean, the scope of imagination and creativity is like immense, and it just opens like a whole new world for artists, for gamers, for even the new boom of NFTs, which is happening in the space. But yeah,
it's also completely borderless as well. Like you don't need a passport, you don't need a visa.
Yeah,
you can literally go and hang out with someone anywhere in the world for as long as you want, without someone saying, knock knock, excuse me, you've overstayed your visa, can you go now? It's truly global, and I think that's really cool in itself. Like getting sort of holistic here, I think that borders and different currencies, and well, maybe not different currencies, they make sense to a degree, but sort of limiting people's ability to explore the earth that they were born on, I don't necessarily agree with. I think, you know, people should be allowed to travel and go explore places without limitation.
Yeah, that's definitely true. All right, coming to you, Michael. So this was from an investor's point of view, and also like it helped retail investors get a clear picture what Web3 is going to be, and what metaverses currently are and what it can be. So I would like to understand from you, like, what would be your take for the financial institutions? So, for example, let's say how is Web3 going to be or going to change the financial institution dynamic? And more importantly, it's like we are also building an enterprise product, and also a product which is for financial institutions. So how these institutions can take advantage for this, let's say, upcoming Web 3.0?
Well, I think as far as Web3 goes, and our product specifically, it's about the ownership of something of value, right? You have multi-party computational protection of the private key, because the private key is the end all to owning what sits in that particular wallet. What's interesting is when you move beyond a token and actual functionality, so able to sign into smart contracts, it's not just currency, it's not just transfer of wealth, it might be transfer of information, voting in elections. If you look at the NFT unit and the metaverse, as Alastair explained, it's sort of like a second existence that people can take on. And these second existences, well, you have assets, and these are often captured as an NFT, a car or a piece of real estate within the metaverse, and these things are of value. So I think there needs, and it's because it's so new, we haven't really thought about the value ownership proposition or the loss of a piece of an asset in a metaverse, like you might if you lost your Bitcoin, if you lost your thumb drive, for instance. But as these metaverses take off in popularity and become more mainstream, these assets are going to be of value, right? We all know the $180 million JPEG NFT. Someone is willing to pay $180 million. Whether you agree that it's good value or not, there is clearly a market there because someone paid. You can imagine this will follow through to the broader metaverses around ownership, around virtual land, virtual cars, virtual artwork, jackets on fire. These things are going to be worth stuff. You're going to be able to transport, and there's several projects today I'm working on asset interoperability across metaverses. So these things become commoditized and they're worth something. And the point in financial institutions is typically to provide products around assets or items of value. Whether you lend against it, you lend against real estate today in a mortgage, you lend against shares in margin loans. So products will be built. There'll be custody products for real estate in the metaverse. And what happens when the owner dies? Well, fulfilling a will, for instance. Mechanics to affect these sorts of things. And this is the broader industry that will grow around, especially intergenerational, with passing these things on. And a lot of it is ownership and structure and custodianship and trusteeship. So this is where banks come in. It all comes down to how you control the asset and then fulfilling whatever the rule was, whether it's a will or it's a direction from a trustee. So I think institutions will start to look at the NFT space a lot like the crypto space. When I say crypto, I mean, Bitcoin, I mean, Tether and all the various tradable tokens as an equal. And people are going to want real services around their, Bugatti Veyron that they've purchased that's digital, but it has a real world value, or it has a Tether value. So I think you'll see a mirroring of financial services, especially in the private wealth management type space, around servicing these what the industry would call non-traditional or alternate assets through regular means, through family offices that control these things, legal lawyers that fulfill custodian duties of transfer of ownership, the various constructs that exist today. But of course, you benefit from the efficiency of the blockchain. You won't have, you can have an escrow service, but it's all built as a smart contract, for instance. We've seen these things for crypto transfer. Well, you'll see the same thing for NFTs, and it'll be like buying and selling real estate, but the efficiency is there. And that's where I think it'll be interesting to see where the institutions play, how far down the curve they want to get involved, and how the acceptance of paying for services around 6 months ago, maybe NFT and utility tokens in games, for instance, people would probably call them a novelty. But the reality is they're not a novelty. They have a tradable value. So I think it'll be interesting to see where institutions build products around these valuable items, very much the same as like a commodity trading item, like Bitcoin, for instance. That's where I'm interested to see. And I'm not going to hypothesize where it goes, because who knows where it goes. but these things are of value, so I suspect products will be built around them.
Yeah,
well, I think just to jump in on that point as well.
Please, yeah.
Like I've seen contribution wallets for like investments where it's not just stable coins in there, and it's not just Ethereum, not just Bitcoin, but there are NFTs that have been put in there as well. So because you have this immutable record of ownership of an asset, whether it's digital or not, that can then, rather than having to sell that to create liquidity to move on, people are actually able to contribute that. Whereas, you know, if you were investing in a traditional stocks and shares, you couldn't put the title deed of your car down in exchange for shares without a whole bunch of legal paperwork. Whereas when it comes to NFTs and simply the non-fungibility of them, that asset is then directly owned by the contract holder. So everything then becomes a liquid asset that you can use to transfer value.
Yeah. When you have immediate transfer of what in the real world is called transferring of title, and you have security that once the smart contract is underway and the instruction's been sent, unless there's a fault in the block, it fulfills. The efficiency gains are huge compared to transferring titles on shares across share registers, for instance, or a house, right? It's manual paperwork you sign and you hope the bank comes through with the final payment. There's so many variable steps. The efficiency of blockchain is what's really exciting. And the fact that we're adapting assets of the real world in a virtual sense, such as cars, such as jackets, clothes, real estate on islands, but you have the efficiency of the blockchain. That's the real game changer. And that's what's very exciting to see how institutions play this, because it could be a very scalable space for building products around these, because the blockchain is so efficient and so scalable on, not just Ethereum, but, polygons. Yeah. So that leads, when you have a product that's in demand and you have an efficient way of provisioning it, it's very profitable for these organizations. So I'll just be really interested to see where they step in.
And if anyone ever doubts the efficiency of a blockchain compared to real life and paperwork, I suggest you come and live in France for a few months, because they love paperwork out here.
That's good to know.
Yeah, that alone, right? Who cares the cost? It just gets you out of the admin.
Yeah, I mean, the space in the direction which is moving, it looks promising. We are seeing especially the two largest sports projects, Adidas and Nike, jumping in, and they're they're releasing sneakers which are NFTs, and they're selling for like thousands of dollars. So it is just one small sector which is setting up an example. And now imagine these sneakers coming into metaverses, and as Michael said, there can be real estate, there can be islands, there can be yachts going on sales. So, it's a whole different world, which
different it's not just Nike. It's not just Nike and Adidas. Yeah. ASICs in Boson Protocol launched Boson Portal recently, and there are a pair of ASICs trainers in there up for sale. Wow. You can buy the physical, the real world good, and the partnership with Artifact, and also MetaFactory. You can buy like an NFT of a hoodie and then get the real world items. There's this sort of like digital to physical twinning of items as well. And these NFTs, they can be like a promissory note essentially for future goods, but you can buy and sell this, and at the end of the day, if you own the NFT, you can go and redeem it, but you have this highly liquid asset that doesn't necessarily have to be like a physical jumper that you're wearing, but like I could own this, for example. And MetaFactory also, like, they've released these NFT t-shirts, or NFT shirts as I like to call them, which were they were originally created in crypto voxels, and they had a limited run, and each physical t-shirt matches the t-shirt itself. And I bought one of them because I love a Hawaiian shirt, even though I'm wearing a plain black hoodie that's actually sponsored by a casino right now. It was a hockey team that I played for, but yeah, I had to buy one of these t-shirts because I was very well known for having very loud and leery shirts, and my wife saw it and thought and just said, "What the hell did you just buy?" But it's cool. It's a unique one-of-one t-shirt that matches an NFT that's available in the metaverse.
I think there was always a stigma around NFTs that people say, well, it just says that it's a copy or it's a right to something, but at the end of the day, it's nothing. But if you look through time, like baseball cards are a great example, right? You didn't own the player, but there were some of them over certain players are worth a fortune now. It's the one of a kind nature, non-fungible. They're all individuals, and the ownership, whether if it's sort of a what you would typically call a trophy asset, it doesn't do much for you day to day, but you own it, and if it's within a genre that you enjoy, there's a pride to it. And I just think that people struggle to link these things together, but it's existed well before NFTs. It's just because it's on the blockchain, it's virtual. Well, the baseball cards are a great example of, virtual ownership of a player. Yeah. The player doesn't sit with you in your house, And I think people are getting their heads around that now, that the ownership point and the exclusivity of it is very much the same as a physical right or variant to the original thing. So I think like the mainstream acceptance of these will continue to grow. And I think the people who sort of, poo-pooed it a bit at the start, I think, well, maybe they still view that, but it's moved on beyond them.
Yes, definitely. Yeah, I mean, with time, we have seen the perception change. Anytime when there's a new industry or a new part of an industry growing, people have all sorts of doubts. People have all sorts of questions that, I don't hold it, then what is its value? If I can't touch it, what is its value? We have come to a point where an entire system, or let's say the governance, can be built on a code. For example, it started with Bitcoin. People are not going to see the paperwork of constitutions. They have a code which can govern the entire ecosystem. So yeah, we have evolved in that space, and let's see how it
Constitution
grows.
DAO.
Constitution DAO. So we were discussing about the financial institutions, and there was a very important element of wealth management, and Alastair, we were also discussing about wealth sharing. So let's take the discussion towards this side of things, and there are a few things I would like to know from you both. Let's start from you, Alastair. So what do we mean by wealth sharing? And just to have a small definition, and the more important part, how can Web3 change the wealth sharing? How can it evolve it? How it can grow it?
Yeah, from my side of things, it's because when, I guess, governance is code, it's sort of like it can be pre-programmed into an asset. So I bought some NFTs of an NFT project, and they're like generative art NFTs, which I'm not quite as enthusiastic as I am about sort of like utility NFTs. But with these NFTs, if your wallet was one of the ones that minted one, or your wallet holds one, then every time there's a secondary sale on the market, 15% of that goes into a pot, which is then shared by the minters and the holders. So just from being there and supporting something early on, you get a constant revenue share of something. And to me, that's a big change, because that's written in the code. It's very simple to execute, and something that in the traditional world is very, very difficult. So it's almost like buying a property, selling it, but then because you were an early investor in the property development, anytime a follow-on owner sells that property, you get a share of that revenue because you were there from the start to help create it. And that's at a kind of at a high level what sort of wealth sharing is. But if you look at it, I guess, a bit more holistically, when there's things that are run as code, you cut out a lot of the costs of middlemen, and you look at sort of various governments around the world and how it's all about who you know, not necessarily what you know, in terms of winning contracts, etc. But if you have the IP and you can prove that you have the best solution, and you can have a decent, well, it's essentially like a DAO voting system where you can pitch and sell your idea to the people rather than to the few and those in power, then people can have a vote and a say on what they think is the right solution to move ahead with, and that won't matter based on sort of networking and connections that you make or what school you went to or anything like that. And I think that is going to be sort of more and more powerful. And yeah, by sharing of wealth, I mean that anyone has the opportunity to earn money for what they do and the goods and services that they provide without necessarily having to tender for a centralized contract. Like you look at the Philippines and Axie Infinity, there have been people that have quit their jobs and they play this game to earn items that people in other countries or wherever they are, like they might be in a better, I guess, like financial situation than the person playing the game, but then they don't have as much time to play the game, so they want to accelerate their characters' developments. They'll buy these items off the other players. And in traditional gaming and traditional gaming systems, that hasn't necessarily been possible because it's always been that you earn your players' items. Once you're done with the game, you're bored of it, you move on, and every amount of time that you spend, every character upgrade you've got sort of dies with your profile. But because it's on a blockchain, you know exactly what the attributes of these characters are, who owned it previously, and who it's being sold to, and that transfer can be very simple. So you've got people that, yeah, like the average wage monthly in the Philippines, this is a few years old, it's 2018 data, but the average wage was $270 per month. And some people are selling one in-game NFT for double that. So why would you go to work and sit in an office every day where you can sit and play a game? But then you've got,
a game, is it? It's an industry. It's an enterprise.
Exactly.
Now,
yeah.
Which is really cool,
Yeah.
right? That's wage arbitrage that they're taking advantage of, or maybe the first world's taking advantage of the second, depending on how you look at it. And this is, I guess, what I was touching to cut it into what Alastair was saying. The entrepreneurship that goes with these games. It's not just mucking around and of little value. There's real economies attached to these things. And this is what I'm really, really interested to see, the development of these marketplaces for built-up NFTs, how the economy grows off it. Because as you've just explained, there's a great social good that can come of it, such as your example of people, mining avatars in Philippines, for a better phrase. This is what I'm really interested in around the metaverse.
100%. And like play to earn gaming is already gaining pace at a rate of knots. And there's actually another project that I'm super bullish on, which is called Genopets, and they call it Move to Earn. So you have your in-game avatar, and it's not just sitting there playing a game. It connects to your sports watch, your Garmin or your Strava or your Apple Watch, and the more you exercise, that builds your in-game character up. So it's gamification of exercise, which, like, I used to play professional ice hockey, and like I'm quite semi into fitness these days, but I see the value in it. I study sports science at university, and I think it's super important for both physical and mental health. And if we can incentivize people to go outside and ride their bike, go for a run, then that's going to be huge. And if they're into gaming and they've got this double-edged sword of I'm getting fitter, healthier, stronger, but so's my in-game character, like that's huge.
Yeah, it's really cool, isn't it? I really like that.
Yeah, it's again like how we are connecting the physical and the virtual. Like not only just hoodies, we can even connect humans to humans. So if they're progressing there, they're progressing in the real world as well. And that's very interesting. Especially on the wealth sharing part, I think the very basic blockchain and very basic smart contract architecture has implemented this wealth sharing. We have seen such contracts in, let's say, in the football world, like where people, they send their young players to other clubs, and on their potential sale, they take like 5 to 10, 15% of the sale value. So if this part of thing, that's exactly the point where they have to do such heavy paperwork. They have to make sure that those kind of deals are happening, and then the profit sharing is being distributed. On blockchain, all this can be automated. This is really like terrific, I'd say.
Well, it's the efficiency to it, but it's also just the transparency. From an investing perspective, there's always there's what we call counterparty risk, that the person you're dealing with won't do what they say they can do. And this is the great thing, of course, with blockchain. You read the code, and the code dictates what will happen.
Yes, you have to comply to the
control
code.
Other people trading, or what a liquidity pool goes up or down on either side of a pair, but you know what the liquidity pool will do. You can figure out what the mechanics are to set the price. These things are observable. They're always observable, and they don't change unless the contract provides for changes in it. And this level of certainty is something that you just don't get in the real world, right? Or not that you don't get, but there is a human element, and humans lie and they cheat and they make mistakes. So it adds a variable, and there's a counterparty risk. And short of the blockchain, an actual chain getting hacked, there is certainty in the code, and that brings efficiency. But the certainty level brings a comfort. It gets rid of a risk, and it's relevant in crypto and trading. But and again, I'll be interested to see how it unfolds in the metaverse, where all the rules are set in stone and they're dependable on how these things work.
Yeah. So this was the wealth sharing part, and now we are saying, I mean, the entire crypto space has already changed how the startups are raising funds. So we had ICOs, we had EOs, IDOs, STOs, so all sorts of these crowdfunding, traditional fundraising methods, which I would say not more than crypto blockchain has introduced. People are able to take the tokens of a project. In return, they can give Bitcoin, Ethereum, USDT, etc. When IDOs, it has become more automated process, since the entire the entire fundraising method is smart contract driven. It is automated. It is transparent. So let's start with the question for you, Michael. So how do you see not only just blockchain, but even Web 3.0? I guess Alastair mentioned Web 3.0 is a whole comprehensive thing, with AI, with maybe IoT, with blockchain. So how Web 3.0 can change the traditional fundraising methods?
There's various steps to fundraising that you undertake. There is the developing what you're selling. There's the going out and the educational process. And then there is taking the feedback and then taking the allocations and processing the allocations. So there's various points in those processes that can be automated. And there is applications for maybe not AI, but smart tech to shortcut these things. Hypersign have Hyperfire, which is a KYC, like a social KYC, to identify that people signing up for white listings are people and it's not a bot. There's various, and I mean, Hypersign again with DID technology, sorts of on-chain technology, which is Web3 applications to identify folks. These sorts of smart tools, I think, will become more prevalent, because at the moment, especially in the private sale stage, it is largely a manual exercise. You build your seed and private round on a spreadsheet, essentially, and you go and you sound your investors through your network, and it's on Telegram, or you go and meet them individually. There's platforms which are developed for your IDOs or your IEOs, which are somewhat automated, but then there's the marketing element and there's the coordination point. So I think these in-between spaces, which are very manual, are what are going to be replaced by elements of Web3 and smart tech. And all it leads to two important things: efficiency and execution, and better decisions. And things like, the vetting of whitelists through AI to make sure it's a real person, and observing behavior, and mapping, and doing chain analysis on investors' wallet addresses to see if they pump and dump or if they hold like they said they're going to. These sorts of things, and using technology is always going to increase the efficiency and the dependability of the process. No, well, yeah, that's my view.
Gotcha. Yeah, I completely agree. Many times,
Yeah,
like
I agree with. Sorry,
Please go ahead,
I
please
agree
go ahead.
with.
Yeah.
I agree with quite a lot of that, and it's interesting because fundamentally decentralization is about not having any centralized, identifiable information held anywhere. But at the same time, you do have to find this equilibrium between not having the authorities, I guess, come after you and feel like you're doing something to shortchange them in any way or to go against their authority, if you will. But you don't want to have your PII like all over the place. And I think when you can do something securely that identifies you as, it might even just be a transaction hash or a hash that is intrinsically linked to you, but unless they can break through SHA-256 or whatever it is, then no one will ever be able to find that information because like you say at the minute, a lot of it is spreadsheets, it's Google Forms, you're trusting Google or whoever it is with a scan of your passport, and that's not the most secure thing in the world. And I really don't like giving up my personal information. I had one recently where someone was like, oh, by the way, well, actually, in order to pay off like part of my student loan, I have to then confirm who I am. I'm like, well, you have all of my contact details. You have my phone number that I'm phoning you from. You have my email address that I've emailed you from. Like, what else do you need? You've got enough to come after me if I don't pay. So why do I need to give you more information to pay you?
Yeah,
like, it's banana lands. It makes no sense.
Yeah. If someone who's pretending to be me wants to pay off my student loan, let them.
Crack on, please. Please pretend to be me and pay off my student loan. I'd love that.
Then pay off my mortgage. I'm okay with that.
Yeah, that's interesting. Yeah, identity management, identity verification has been a very strong use case of blockchain as a whole, and if you mix AI and if you bring this whole Web3 into this part, just specifically this part, yeah, the efficiency of the entire ecosystem can improve. And let's see if there are startups working in this side of things, and also possibly changing or evolving the fundraising methods.
Well, the exciting space in KYC is like digital ID technology, where you undergo KYC with trusted vendors, and maybe it's several vendors once, and then it's printed on a token that you are this person, and then you keep possession of the token. So your personal information is only vetted and handheld by a few very professional, well, one would hope very professional organizations. And it's not like Alastair said, where you go through these private rounds. You know, sometimes you've got third-party KYC vendors. Sometimes on Telegram, they're asking for JPEGs of your passport. So you get rid of these risks once we get to a point where we have these sorts of universal identifier tokens that parties can control, and they're pre-vetted and they're trusted. The portability is really important, because if you get into financial institution spaces, there's no way around. They need to know who you are. And this is the big issue with DEXs today in institutions. They can't, you know, the Goldmans and JP Morgans can't trade via Uniswap because they need to know who they're buying and selling with. It's a regulatory requirement upon them. So that's what makes these things difficult, and it's what forces these sorts of dark pools that you see in the equity trading space between these banks, where they trade amongst each other because they know each other. They've completed KYC on everyone in the pool. So these are the sorts of solutions that need to be addressed in where crypto is today. But there are these solutions. There are the generic DID, I should say universal DID type solutions, which we need to get through. And this is just the continuation of Web3 beyond, connecting to smart contracts for transferring stuff, but the ownership and transferring and storage and permissions to people's personal information, for instance.
Yeah, I'd also like to just quickly caveat what I just said about the spreadsheets, the Google Forms, is that there's currently not a better solution out there. So it is what it is, but I think it can be improved upon. And with the advancing technology that we have and the advancing uses of the technology, I think that there is a solution out there, or we're on the cusp of it. And as you say, there's a lot of sort of digital KYC providers that are there, but for a lot of these projects, when you're in early and they're doing their seed or pre-seed fundraising, then it's just a case of, okay, right, you're interested, let's get some information, here's a wallet address, and we'll collect. And then as they get to economies of scale, it then makes sense to onboard a third-party KYC provider. But yeah, I've got no major issue with it. There's not a better solution out there. So I'd just like to have a little bandy caveat.
Yeah, especially for the blockchain, we see a small limitation when it comes to the industries which are very data heavy, and building a solution in this side of things on blockchain, or maybe not on blockchain, but having that balance, balance of transparency, privacy, encryption, which blockchain is bringing, it is still not being possible in the centralized space. So it will be interesting to see how both of these find a middle ground, and this data heaviness and blockchain can be utilized together, or maybe blockchain can be scaled or optimized in such a way that it can handle this mass of data.
New level ones, layer ones that come out, which are very specific to handling large data records. It'll be specific use cases, and that's the exciting thing with crypto. You find a problem, and somewhere along the line, someone has a solution to it.
Yes.
First market, but yeah, I agree that the data heavy stuff isn't necessarily suitable for Ethereum smart contracts, but yeah, as there becomes more and more a need, I'm sure there'll be more akin to like a SQL database tokenized. Maybe there's one in development, I don't know. But these things come about, right? It's the evolution of blockchain. And the great thing is, because it's decentralized, no one, and I mean, anyone who has a technical background can develop a chain. There's no limits to people's participation and imagination, and there's sufficient funding out there for people who have good ideas and need help with execution. So those sorts of solutions, I'm sure, are just around the corner.
True. Yeah.
And I think the execution side of it is so key now. Like rewind back to 2017, 2018, when people were raising obscene amounts of funds, as if like that was their end goal of fundraising, and they'd never have to rely on delivering a product. Like we were obviously going to go into a bubble. Now there are many great projects that used their funds for good, and now it's paying off and it's coming good. But I think the technical knowledge wasn't quite there then. So while we were all getting excited about these ideas and pumping money into it, the crash was inevitable. And I'm not going to hypothesize on the future and whether we're going into a bull or a bear market, because I honestly don't know. But the fact that there's projects that are pre-delivering, i.e. they've got an MVP or proof of concept before they even start fundraising now, is a very, very positive sign for our industry.
Definitely. And we don't see startups like raising like around 500 million or $1 billion for their projects like we have seen in the past.
Or 4 billion.
4 billion.
That is.
Yeah, that's crazy. And but yeah, we see like projects now have, as you mentioned, their MVPs ready, at least the model, the base model of base product of their MVP ready, and they're going for the like traditional pre-seed seed rounds, then maybe an ITO, then if they project further, maybe Series A. But yeah, we have again moved a little bit towards the traditional startup phase, like how traditional startups were raising their funds. We have adopted their culture of preparing the product and making sure that there is a product and there is a. And I think this industry has already learned. There have been so many rug pulls, scams, and all sorts of things. People really want to trust the project first before they invest. And if they can show the product, it becomes a clear sign that yeah, there is a team who is working. And that's the first thing which even any small investor, retail investor wants to ensure. This is just from the retail investor part, from the VC and from the big investors. They need more credibility. So yeah, it's good to see the space evolving in that front.
It's just efficiency again. We keep harping on about efficiency. This isn't efficiency of a blockchain necessarily. It's the efficiency of an enterprise because there's a cost of capital.
Mm-hmm.
If you raise $100 million and you don't deliver anything, versus you take 1.5 million and you do stage sell downs of your project tokens along the way to fund development. The cost of capital when you raise these things in your dilution from a project perspective, but also the alignment of goals where matching the project to keep making money needs to keep delivering. Otherwise, they can't sell the tokens to make the money. Yeah. These things are into efficiency. The days of just, well, as Alastair said, we will just take $500 million off the table. The founders are paid at that point, and there's no hook to get anyone to deliver anything really. They're long gone. There is efficiency and cost of capital. The efficiency of capital allocation rather is now much more tighter because you're only raising tiny, amounts to get you to the next step where there's another funding round or there's a sale of tokens if it's post TGE. So that shows a maturity in the industry too, because there aren't the cowboys that are just raising a fortune because people will send it to them. There's a maturity to that, and that's great to see from a participant's perspective.
That's right. Yeah. All right. We have touched the 1 hour mark, and I think the last question we have already discussed, which was about Metaverse and Web 3.0. But just a common educational, from the education side of things. There are times, especially when projects are coming out to take advantage of that hype. We have seen Metaverse and Web3 being used together, right? And people, especially from, let's say, who are new to the crypto industry, they are not able to distinguish. Like, okay, Metaverse, we have a virtual world. Web3, we have a whole evolved form of internet. So let's start with you, Alastair. Do you see? Can you help us, clear the confusions between the two? And if there is a link between the two, what is it? Especially understanding this from a business perspective and not from the technical.
So I'm going to have to ad-lib a bit here because I think there was someone in the background making coffee. So I didn't quite hear the full question there, but I think the sort of getting your head around the Web3 and blockchain and metaverses and all of that stuff is that we really need to see it as like a blurring of the lines between digital and the physical world, and that reality that we live in such a connected world now that we need to either embrace it or kind of go and live up a mountain in a hut with no internet. Like it's inevitable. It's happening all around us, and there is a massive educational aspect to this as well. In that, with Web3, all of our devices are connected. Our devices are intuitive. That's why your phone learns some commands that you do. That's why you think your phone's listening to you because there's targeted ads. It's because of the amount of data science that goes on in the background and behind the scenes. Like if you're a 35 to 40-year-old male that goes to buy a cupcake on a Tuesday, on a Friday afternoon you're going to buy a fishing rod. Like how you make those parallels, I have no idea, but that's literally what they do. They look at behavioral patterns based on your cookie data. And in the traditional Web 2 space, if you're using a product, and as an example of this, like when people on Facebook say, or those viral messages go around saying, I don't give Facebook the right to use my photos, blah, blah, blah. It's like, well, don't put your photos on Facebook then. Like if you're not paying for the service or paying for the product, you are the product. That's how they make their money. But when you move into a blockchain or a Web3 world, you can then monetize your own personal data because there's no centralized party there to profit from it. But you have to be very, very, very careful with how you store your data and how you store your products. Everyone wants decentralization. Everyone wants to move away from the centralized banks, particularly since 2008. And who knows what's going to happen in the not too distant future. Like COVID relief funds are going to have to get paid back. But if you want to move away from that system, when you deposit something into a bank or a bank safe, you expect that to be uber secure. Like you expect there to be a 12-inch thick wall and a security door to your safe deposit box. If you don't have that in your own home, you're not a bank. If you want to be your own bank, act like your own bank. You need to up your personal security. You need to up your online digital security. You need to be aware that if you lose what you have no one to blame except yourself. There is no comeback on this. And I think that's a very powerful learning lesson. And I am all for decentralization. I believe in that fully. But I do believe that for a lot of people, there needs to be that hybrid model where you can't have a fully decentralized place and a fully trustless environment if you're then trusting other people with any of your own data or information or physical assets. And how this sort of blurs with the online digital world, it's all about what you give up and what you share publicly. Like the new sort of way of hacking or getting data information is, oh, when I grew up, my first car was, and people are just piling into the comments with what their first car was. Now, chances are that's your backup security word to get into your email account where they can then access everything that you have. So it's not just the obvious scams. It's not someone phoning up and saying, hey, there's a bumblebee in your bank account. For those listening, that's a Phone Jacket reference, which is a great British TV series. But yeah, it's not what you traditionally expect. There are clever and cleverer ways of getting access to this information. Like if you leave your computer on overnight, you're not there to monitor it and see what's happening on it. And if it's online, it can be hacked. It's the same as having a cold storage wallet. If that's connected to your computer, there is a way of hacking it. If it's not connected, they can't get in. Same with your laptop. If it's not connected to the internet, they can't get into it. So take your private security treat it very highly. And then yeah, I think on the other side of it with the metaverses and all of that, I think it's a great playground to express yourself however you want to be. I think the most attended event in Decentraland was one of their Pride events, because you had people from all over the world in places where they can't express themselves. They're not allowed to express themselves. But in the safety of their own home, in the privacy of their own home, they could go to this digital world and express themselves to people all over. And I think that is so, so powerful and so meaningful in terms of freedom of expression. And like the internet has no boundaries, the metaverse has no borders. And yeah, I think it's such a good thing for people's mental health and expressionism, and I think that's amazing.
Yeah, that's I completely agree with that. I mean, again, coming back to the same point, the potential is enormous. It's gigantic. Michael, what's your take? So we have, again, I think I should have asked this question right in the beginning, but we have already discussed a lot about Metaverse and Web 3.0. So what do you think, like, if you can help us clear the confusions from the business, from the enterprise, from an investor standpoint, and also from the fundamental standpoint, Web 3.0 and metaverses, how they differ, how they're linked, and where do you see the future heading towards?
Look, I mean, Alastair gave a pretty good description of how these two things intermingle. I suppose the way I think about it is the metaverse is a place. It is a use of technology to provide a platform. The Web3 is really the strings to pull these things together. It's the glue which links, not just possession, but interaction. I won't say protocol because it's not the right use of words, but that's how I think of it. It's a protocol, whereas the metaverse is the delivery. It's the end product. So the metaverse and the ownership of assets on those metaverses is decentralized. It needs it needs the infrastructure of a decentralized technology. So Web3 fits is the obvious solution. That's a very simplistic way of describing how the two work together. But to me, it makes sense. One facilitates the other. The metaverse is the experience, how you experience it and interact with your interface, and between your interface, your keyboard and your mouse, and the metaverse, Web3 is the bridge. And you need one to achieve the other as these things evolve. We're going to need more sophisticated ways to interact with the blockchain. The blockchains themselves will get more sophisticated, and the interactions, are being defined, the abilities and the scope of Web3. So they're somewhat intrinsically linked, but they serve different purposes. One is the infrastructure, the other is the end product or the end platform, if you like. That's how I describe it.
Yeah.
Both are important, and when they're monetized or the ownership is tokenized for such important co-mingled elements, then these are valuable tokenizations. And your question was, well, what is the business element? At the end of the day, an economy and capitalism works on ascribing value to things and being able to buy and sell those things. The same thing applies here. We sell rights to toll roads in Australia to people who own those toll roads and charge tariffs when cars go on the tolls. They charge tolls, right? Same here. Using Web3 infrastructure or the tool set to interact with these things is valuable. There's tolling, there are fees with various tool sets. The metaverse, is an extension of the real verse, if you like, and for all the reasons that COVID's really perpetuated the need for these sorts of things, there is an intrinsic value. And I think we touched on the start of this for banks, but, sales agents, exchanges, if you like, consultants. There's a whole industry around sale and valuation of things that are valuable to others. So there's a whole economy to be built on those two things alone. That's what I think the business opportunity is.
Absolutely. Yeah, I mean,
and
yeah.
Also
metaverse, yeah. Please, go ahead.
So also with anything that's based around code, it's identifiable as to what your work has been. So you don't necessarily need to have this sort of like a big brand name behind you. You can have a provable track record of the goods and services that you provide. And this goes back to like wealth sharing, in that you don't need to have built this sort of like big brand behind you and necessarily have spent a lot of money on marketing. Because if you have a provable track record and people buy into that, or you can just show like what you've done and it is explicitly yours and only your work, then that adds value to yourself as a service provider. And I think that's where like metaverses and Web3 like overall is going to really come into its own, in that you can provide services outside of like say it's accountancy. You can show all of your transaction hashes for the accounting and record keeping that you've done without having to be representing a big four company. And I think that's where there's going to be a big foundational shift. The inclusivity and accessibility of metaverses. I think user experience needs to perhaps step up a little bit, but there are some unbelievable projects coming out that will help facilitate this. But yeah, it's going to create a truly global world where you can have your business meeting with someone like kind of like we're doing on Zoom now, but more of like a real life kind of thing. And it could be in a metaverse, and we could be in Australia, we could be in Iceland. It doesn't matter. We can just go wherever we want to be.
With your hoodie on fire.
Meeting.
I could
exactly with my hoodie on fire.
Amazing.
Amazing.
So yeah, I think there's definitely exciting times ahead, and so how businesses transact and interact with their consumers will change massively as well.
Yeah. Well said.
Yes. Yeah. I think that's a very strong conclusive remark of this entire session. Definitely going to be a highlight, and I'm definitely going to upload a separate video of this part. But other than that, yes, as we have seen, yes, Michael also said Metaverse, one of the end product, one of the deliveries of the entire Web3 space. Like we have seen the distinction, Web 1 was just read, Web 2 was read and write. Now Web 3 is read, write, and own. And if you can own, you need a storage point to own. And if you're owning, you can also sell, trade, transfer, things like that. So the entire opportunity, which is getting on a very fundamental setup, it's enormous. All right. Thank you, Alastair, for joining us. It was a very, very informative session. Thank you to you, Michael, as well.
Alastair,
Thank you for having me.
And it's all new, and I mean, this stuff hasn't been covered particularly widely. It's very, I guess, futuristic is the best term to use of where our civilization could go. So I think it's a really exciting space.
Yeah. What does Web 4 hold?
It's frightening, isn't it? I mean, let's see. No doubt that'll be spurred on by a pandemic or a meteor or something. It's interesting stuff.
All right. I think our communities, especially like even the people who are coming new to crypto, are going to have a lot of things to take from this session. And again, thanks to you both for sharing your views, sharing your opinions, and most importantly, sharing insights on what Web3 is, Metaverse are, the potential they hold, the technologies which are supporting these two sectors. Thank you so much again.